Well, like much of the market, the transportation sector is also booming. Look at FedEx, J.B. Hunt, Norfolk Southern, all hitting 52-week or multi-year highs. Are more gains to come in this very important group? Welcome to Trading Nation. I'm Brian Sullivan. Chad Morganlander of Stifel Nicolaus, Chris Verrone of Strategas Research Partners are your guests today. And Chad, listen, there's two things to this group. Number one, people who own the stocks are happy they're going up, but the transports are also seen as a leading indicator for other parts of the market and or the economy. So your projections matter on a more macro scale than just these stocks alone. What are you seeing?
So everything changed after the election. You're going to get a fiscal stimulus program as well as you're going to get a tax cut. What everyone is doing is upping their GDP expectation for not only 2017, but beyond 2018. So this is one of the critical reasons why you've had this get up and go in the transportation sector. We believe that is justified. We believe that earnings are going to be quite robust going into 2017 and into 2018. And valuations, they make sense at this point. Our GDP expectation for 2017 is a little bit more than 2.5%. In 2018, we should hit that 3% number once again.
Okay, Chris Verrone, when you look at the technicals on the transports, are you seeing a bullish scenario?
I would definitely agree, but what I would emphasize is nothing really changed the way we're looking at these stocks. They were getting better all year. In the weeks and months leading up to the 2 weeks ago, these stocks were improving. And I also want to emphasize, when you look at the large weights in the sector, FedEx, largest weight in the sector, breaking out new all-time high. UPS, second largest weight in the sector, breaking out new all-time high. So we have strength in the weights. We also have the airlines turning as well, and the rails have been strong all year. So this is not a new trend for us. This is a continuation of the trend, and we think it's bullish.
How bullish does it look, Chris? I mean, is there a way to gauge the strength of your optimism?
Sure. I think you want to look at this relative other parts of the market. And what's been compelling to us for the last several months is you've been getting paid to own these stocks versus other segments of the market. So versus the bond proxies or versus the staples or the utilities. So that's the big change as far as we're concerned. You're getting paid to own transports relative to something else. Big change, bullish change.
Yeah, and Chad, final question to you. At what point did it become, a little bit overvalued? If I look at the forward price to earnings ratio on some of these names, I'm not saying they're over the market necessarily, but if but they're getting up there. How much are you willing to pay for them?
So you could go another 10% on these. Look, the market overall, we think for 2017 is going to be a total return of roughly about 7%. So 10 to 15% upside from here. We would then start to fade that trade away.
All right, Chad and Chris, it was a good discussion on an important group from a macro perspective as well. Guys, thank you. Folks, thank you for tuning into Trading Nation. I'm Brian Sullivan. See you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.